The International Monetary Fund has some dire warnings for the world economy. Releasing its World Economic Outlook for October 2022, the IMF has slashed GDP growth estimates for most advanced countries. While the GDP forecast for India has been slashed by 60 basis points, for the US, the cut is larger at 70 basis points. The Chinese economy is set to slow down its growth by 10 basis points. However, the estimate for the EU area has been raised by 50 basis points. According to the IMF, the cut in India's GDP forecast is on account of subdued external demand and weaker than expected growth in the first quarter of the current fiscal. The IMF has also pegged India's inflation for the current fiscal at 6.9%, much above the RBI's upper target of 6%. Some of the important observations by the IMF. The worst is yet to come, and 2023 will feel like a recession. 1/3 of global economy is likely to contract this year or the next. US, China and the euro areas will continue to stall the world's economic growth. The energy crisis, especially in Europe, is not a transitory shock, and that price pressures are stubborn and will remain major concern for policymakers.
Our global growth forecast for this year is unchanged at 3.2%, while our projection for 2023 is lowered to 2.7%, 0.2 percentage points lower than the July forecast. The 2023 slowdown will be broad-based, with countries accounting for 1/3 of the global economy expected to contract this year or next. The three largest economies, the United States, China, and the euro area, will continue to stall. In short, the worst is yet to come, and for many people, 2023 will feel like a recession. In the United States, the tightening of monetary and financial conditions will slow growth to 1% in 2023. In China, we have lowered next year's growth forecast to 4.4% due to a weakening property sector and continued lockdowns. The slowdown is most pronounced in the euro area, where the energy crisis caused by the war will continue to take a heavy toll, reducing growth to 0.5% in 2023. Almost everywhere, rapidly rising prices, especially for food and energy, are causing serious hardships for vulnerable households.
A third consecutive day of sell-off in the Indian stock markets, broad-based selling across most frontline stocks and a sharp fall in index heavyweight Reliance pulled the Nifty 50 lower. The index ended below the key psychological mark of 17,000 today. Even as results season goes underway, the Sensex has lost more than 800 points. The losers were led by Divi's Labs, which was down 5%. Other big laggards included IndusInd Bank, Eicher Motors, Nestle and JSW Steel. There were just 3 gainers among the Nifty 50 stocks: Axis Bank, Adani Enterprises and Asian Paints.